Hi, it's Larry Gaines, Power Cycle Trading. Happy New Year. In this video, I wanted to show you some of the more memorable trades that we had for 2013. These will be, anything from gold futures to a lot of different weekly trades. And I'm also looking forward to showing you many, many more trades in 2014. But to start out with, this was on the last day of the year, December the 31st. Wow! And this was in the trading room. We were following gold, and we do a lot of different futures trading: gold, NASDAQ 100, S&P futures, crude, things like that. But one trade that I really like to look for is what we call the volatility compression breakout trades on gold. So, with our indicators, we can show when something is getting into what we call a compression squeeze, and these particular dots show when the squeeze starts and show when the squeeze ends. There's no dot. So looking at this type setup, when you get a really tight range, it's going to either take off to the upside or break to the downside. So using our lower steady indicators, and we can get a good high probability direction of where this thing will break. So this is on a 400 tick chart, but this particular trade, what we'll tend to do is put an OCO order in right above where we think major resistance is, and right here it was around 1190. So I had an order in to buy, and it broke out and away it went. So this particular move here, from this breakout of this bar right here was 1190. It really did not pull back until it got to 1198.5. That move right there from 853 to 856, 3 minutes, that's $800 per contract, one contract. And then it consolidated again and moved up another, 98, another $800. So this was a huge move. You can see when you do get these compressions that something big will happen, either up or down. So that was a very cool, memorable trade, the last day of the year. And let me show you a few others for the year. Now this has been one amazing stock. This was Tesla, TSLA. Now this is a monthly chart, and so again, here's a compression squeeze which started in March of 2012, and you can see how it consolidated sideways from March 2012 until March of 2013 right here. So a full year sideways in a major, what we call compression squeeze, and then it triggered and it broke to the upside. So Tesla went, after that trigger on a monthly, it went from basically $40 up to a high of $194.50. So that's what it looks like on a monthly. Now we can break it down weekly to daily. Now here's a quick look at it on a weekly. You can see when it fired, broke to the upside, and this is a 8 period moving average on the weekly. You can see how it just really held to that 8 period moving average. So that's on a weekly. Now here's a look at Tesla on a daily. So again, had a compression squeeze here in June, and right here it triggered on the 27th and had a nice pop to the upside. So it went from here 108.84 up to a high of 132. Now I'll show you the trade, that a couple trade setups that were based on this compression squeeze breakout. Now one thing I like to do is when I see a squeeze setting up on a longer term time frame, such as a weekly or a daily, then I like to do my entry based on a shorter term time frame. So here, this chart here is a 60-minute time frame, and it was also in a compression squeeze and then triggered to the upside. So it's kind of like a house of cards. Once one shorter time frame triggers, it triggers the next time frame, and so on. So here's the trade off of that. Now this was just a simple selling a put, and this was basically selling a put one standard deviation away from the current price at the time, and it's a way to take advantage of an up move, so collecting premium. So this particular trade collected $65 a contract, and you can see here, 10 contracts, max profit. If it expired above $100 where the put was sold, it would be a $650 return. So sold the $100 put on the 26th of June, and on expiration date 2 days later let it expire worthless. So here's the 65 puts right here. It's about a 20 delta, and 2 days later, pull that up, 2 days later those $100 puts expired worthless. Tesla was trading up at about 100 and let me check that price. It was trading up at about $118, so pretty far away. So they expired worthless and kept all the premium for $600 or so. So that was a nice trade. And here's the next trade off of Tesla based on that same breakout. Now the other part of the trade was just to do you could either go long calls, go long outright calls, or do a call vertical spread. In this particular case, did the call vertical spread. The 108-114 call, was able to get into it at a $200 debit, and took this thing off on the 5th of July, and it maxed out on the profit of $400 per contract. So that's a 200% rate of return, or return on your capital. So that was nice. So here's another look at Tesla. So it was put on the 28th on that call spread, taken off here. So it's trading about 118.50, and had the spread based on a 114 strike to the upside. So it was a nice trade set up there. I'll show you the end result. So it was a $15 wide spread, the 108-114 call spread, and maxed out because it closed at 118. So maximum profit over $600 contract, $600 profit on those contracts. So really nice trade set up there. Actually, the spread, it was over $400 contract profit. So it was put on, it was the 108-114 call spread, cost $200, and taken off for $400 profit, or $600 per contract. So on 10 contracts, that was quite a nice little profit, over $4,600. Now here's another compression, volatility compression squeeze breakout or down. This was on Apple, and this came, you can see here, it was in a really tight compression squeeze, which started on about the 6th of June and triggered on the 18th, 19th, and sold off from 426 all the way down to a low of 389. So huge move to the downside. It had been trending down. You can see it was below all the moving averages, and so when it broke here, it was a great short opportunity. So a couple different ways to trade that, but one really interesting trade is to look at back ratio spreads, which is a defined risk trade but has unlimited profit potential. So I'll show you that. Now this trade was put on for a slight credit, which makes it a really interesting trade. So you can define your risk, and I mean, it's got a lot more potential profit or exposure as far as loss. It's an interesting spread. It's a little bit more advanced, but anyway, got into it at a net credit, and you can see once that market broke down, the acceleration of the breakdown, since you're long more puts than you are short, it accelerates, and this particular trade went from a credit to a plus $930 per contract for that trade. So a couple of really interesting trades, and there'll be many more for 2014, but these were some really cool ones that I wanted to point out, and I hope you'll join me at Power Cycle Trading, and Happy New Year. Now one last thing, if you'd like to join us at Power Cycle Trading, we're having a year-end special here, and so it's a 2-for-1 special. There's a link on this email, so you can get in here, jump in here, and look to see what you receive and what all's covered. But you'll get 2 of my signature trading courses at your choice. They're listed for $597 each on the, for everything on the on our website. You're going to get 1 month in our virtual trading room, and 2 months to my Outlook program, which is a daily newsletter, video newsletter. Insider Secrets for Technical Trading goes over how to use Fibonacci retracement and extensions and support resistance, and an option course on how to select strike prices for your options. This total value is over $1,600, and the holiday special is $5.97. So if you're interested in that, please check out this link, or you can go to powercycletrading.com/holiday special. So a very happy new year, and talk to you soon in 2014. Thanks again.